Hello everybody and welcome back to The Good, The Bad and The Bitcoin. Today I would like to talk about something that probably a lot of you guys have been going through as well. I want to show you a simple way with the help of AI, with the help of vibe coding, like with ChatGPT or Claude, for example, to backtest your trading strategies, to see if you really can earn money with your trading strategy. So if it's basically worthwhile pursuing this one. And you've probably had this before also, that you come up with a trading strategy, maybe you combine a bunch of indicators, maybe you code your own TradingView strategies and indicators, and then finally you see something like this, which, by the looks of it, looks quite nice. Seems like this kind of trading strategy seems to be able to, pick quite in a good fashion very often where it's good to short the markets or where it's good to build up long positions. However, now a couple of years ago, we would have needed to take this and either manually code something or go through the painstaking work of looking at each individual signal, which can, of course, especially if we're talking about a scalping trading strategy, become quite a lot, as you can see here. So that would consume probably a lot of time if we want to do that manually, for example, with Excel. Thank God nowadays you don't need to do that anymore, because we have tools that can do that for us. And one of those cool tools that I'm going to use today to find out if this trading strategy really is one worth trading for me is Claude Code. So everything I'm doing here today, I'm going to walk you through that step by step. I'm personally going to do that with Claude Code. However, you can, of course, as well use other tools. So if you're more a ChatGPT person, or maybe even you use something like DeepSeek, or the multitude of tools out there, of course you can use other tools for that as well. So the first thing we want to do, at least in my case when working with Claude Code, is that we want to create a folder, which I have done already here. So I've created a folder called Backtest. What is in this folder? First of all, there is a file called Claude.md. MD stands for Markdown in that folder. And then there is my data that I want to analyze in this folder. How do I get the data? By the end of the day, I do get the data by downloading it, in my case, from TradingView. So if I load onto my chart all the data that is available. So let's see how far back we can go here. How much data on this case we want to see if this trading strategy is working on the Bitcoin perpetual future. And the data goes all the way until January 2023. So we have roughly 2.7 years of data, which is good. That gives us a lot of good data to really test the trading strategy on. The next thing I want to do is I want to go to this drop-down menu, and then I want to export chart data. So this will export all the available data that I'm looking at on my chart here in a time format. You can choose ISO time. I always keep the unique timestamp here. So then after you downloaded this, copy this data, simply this file, it's a CSV file, into the folder that you want to use. The second thing when working with Claude Code that I recommend you doing is to create a so-called Claude.md file. MD stands for Markdown, which is a file format that AI, that these large language models such as Claude or ChatGPT or AlphaSeek, they love files like this. And this file, Claude.md, basically gives Claude some development guidelines, because it's very easy for those models at one point, especially if they are working with complex data, if your project gets very complex later on, to kind of start hallucinating or showing you things and showing you results that are not the reality. That's I want to try to give it some guidelines that it also knows how to inform me about certain findings. Now we've downloaded our data, and the data for this is kind of this here. So if you upload this, for example, to Excel or Google Sheets, you'll get something like this. And of course, we are interested in those long and short signals. So let's dive into this and start actually working with Claude. So as a first step, I'm going to ask Claude to read the Claude.md, which is also in our project folder, and to confirm that it understands the development guidelines. Yeah, it confirms that here I've read Claude.md file and understand the development guidelines, basically copying, telling me now what did it learn from that file. Then it adds to this also important reminders: only do what's asked, editing files rather than creating new ones. So we don't want like a million files later in our folder that we don't know anymore which one is still relevant and which one not. And to avoid also creating documentation until I explicitly ask for it. I understand and I will follow those guidelines. Great. Now we have a second file already in the folder with our data that we just downloaded from TradingView. So the next step, we want to ask Claude now to have a look at our data file. So the chart data with the long and short signals that I just downloaded from TradingView. So I'll type here, you will find a data file in the folder with Renko-based chart data, a brick size of $200 per brick. So I'm using a Renko chart here, not a traditional candlestick chart, for example, of the Bitcoin perpetual futures. The data also includes signals for long and short trades, as we've just seen, on the chart. Have a look at the data and confirm that you understand it. Answers me here: I'll examine the file to understand the Renko chart data and trading signals. So you can see it searched now for a so-called CSV file, found our file data.csv, read the first 50 lines, and then continues to have a closer look at the so-called trading signals there. The trading signals very often have NAN, so there's no value in them unless an actual trading signal triggers. So I want to help Claude here a little bit by telling it to to use Python to analyze the data. It confirms I'll use Python to analyze the Bitcoin perpetual futures Renko chart data. It coded now an analyze data Python file, which I'll confirm that it's allowed to create this file. And next, I guess it wants to run the file. Here we go. Let's see what the outcome of that is. Yeah, it sees here the shape of the data, and you can see the columns that we also had: time, open, high, low, close, long and short. And now it wants to analyze the structure and identify trading signals. Let's see what the outcome of that is. So another Python script, which it calls analyze signals. I'm going to allow it to create this one. So all of these Python files, of course, you could code for yourself. It's not like rocket science, not that complex, but I mean, we are like 5 minutes into the coding session, and and it has already created 2 files, which probably would take me longer. So Claude is done now and says like, okay, this is your data set. You have 12,312 rows with the columns time, open, high, low, close, long and short, a fixed $200 brick size, which basically means that every single brick you see here when I zoom in a little bit, so the green and the red bricks are a price movement of $200 on the Bitcoin perpetual futures. However, he encountered also one problem here. He says, well, there are trading signals, or at least columns for it, called long and short, but they don't actually have actual signals. There are like so-called non-NAN values, with NAN being a placeholder. These are intended, so Claude assumes these are intended for trading signals, but they need to be populated. But however, if we go here again into our data file, we can see that sometimes there are values in those columns indicating that at this precise moment there was either a long or a short signal. So we want to tell Claude to look at all the data, and when there is a non-NAN value for long or short signal, to treat it as a long and short signal. For this, I'm going into the so-called plan mode with Claude Code. This is always good because I don't want it to rush ahead and create a billion more Python scripts. I want it to plan what it wants to do first instead of just going and doing stuff already. So I'm going to tell it now, please go again and check the long and short columns like we just saw. There are definitely are values sometimes. And if you find a value in there other than NAN, it means a trading signal was triggered. So basically they are binary. If there's something in the column, in the long column, for example, it means there was a long signal triggered. Likewise, of course, for the short column. So it says now I'll re-examine the long and short columns more carefully to find the actual trading signals. Let's see. So writing Python code here again, I'm going to allow the execution. You could also switch to auto accept, but I highly recommend to not do that because you risk eventually that the analysis of your data goes into a direction that you do not want. Okay, now we're getting somewhere here. So it says now number of non-NAN long signals, 361. And it says, okay, perfect. You're absolutely right. This is, by the way, also something Claude always likes to write. After careful analysis, I can confirm there are 361 long signals in the data. So 2.93% of all the data contains long signals. And 361 short signals. There are no overlapping signals, which is important. So they never occur at the same bar, so to say, the same Renko box. 94% of the data do not contain signals, which is makes sense, of course. The strange values, because appear to be corrupted representations of binary ones, but they all represent triggered signals. Okay, good. So now we have that. And now, of course, we want to know how effective are those signals actually? Are they worth trading? And for this important, I go into the plan mode and I'll ask Claude to do the following. I want to see if the long and short signals are actually worth trading. For this analysis, we want to assume that we start with an account of 10,000 US dollar TFM. On every long signal, 100% of that money is invested into a long position. So that basically means whenever we see a long signal triggering, like this one, for example, here, 100% of our account balance, in the start that's $10,000, are invested into this trade. And the position is then flipped once a short trade occurs, meaning we are always in the market. For this, we assume we are trading a strategy that's always in the market. Of course, you could already start working here with, take profit targets, stop losses, trailing stops, and so on and so forth. But in the beginning, we want to keep it as simple as possible. So a strategy where we are always in the market and simply flip from long to short and vice versa when the actual signal appears there. So like I said, on every long signal, 100% of the money is invested into a long position. On every short signal, 100% of the account balance is invested into a short trade. The execution price for the trade is always the closing price of a Renko box where the signal occurred. Now, this is very, very important to give clear directions on this, because otherwise you run into the risk that Claude kind of makes up prices and assumes that you got a much, much better entry than you actually get. Means, for example, let's scroll down on this, that would have been a short position, I assume here. On this short position, we would get into the trade at 21,800 US dollars. On top of this, I ask Claude that it has to. So first of all, there's no take profit, no stop loss. This is what I said. Trades are simply flipped when an opposite signal occurs. Trading fees, this is very important, are 0.06% half turn. Half turn means we pay these 0.06% when opening the trade and then again also when closing the trade. So for the total trade, we would have 0.12% and in trading fees. And we want to assume that we get a $25 worth Bitcoin price into an out of trade. Meaning, by this, I want to simulate slippage. Meaning, if we get into a trade, for example, at 21,800 in the backtest, the real long entry would be 21,825 US dollars. Because you never get perfect execution, and in reality, you will have slippage. All right, let's see what Claude makes out of this. Okay, it says here, I'll create a comprehensive backtesting analysis to evaluate the profitability of these trading signals. Let me analyze the data and create a detailed plan for the backtest. And it does this, so it doesn't go now and already basically starts to code, because I was in planning mode, which I can change with Shift-Tab, always here if you're using Claude Code. So this is the plan. It's doing backtesting plan for long short signals. The objective, it says, is evaluate the profitability of the long and short trading signals. On the Renko chart, initial capital 10,000 US dollars. Position size 100% of account balance on each signal. Closing price is of the signal bars, the entry price. Exit position flipped on opposite signal, long to short or short to long. So trading cost, as I said, 0.06% per half turn. So a round trip would be 0.12%. Slippage, $25 worst price on entry and exit. So in total, $50 per trade. Correct. So what are the actual steps now it wants to do? First, it wants to clean up the so-called corrupted signal values. So all those weird numbers that we saw in the signal, and replace them with either a 1 or a 0. Then identify all the signal bars and their closing prices and create a chronological sequence of trades. Then it will create a so-called backtesting engine and some performance metrics, and then by the end of the day, visualize the whole things for us. So let's see how this is going to look later. Are we actually having already a profitable trading strategy here, or are we just seeing things on chart and actually this is probably not going to lead anywhere? Okay, it's created a backtest. I'm going to tell it, yes, you're allowed to create this file. And probably next step is that it will ask me if it's allowed to run this Python file. Okay, the initial backtest had an issue with position flipping logic. Let me fix this to probably handle position flips. Position flips meaning when we exit a short position and enter a long position, for example. Good, so it created a new backtesting file to fix this issue it had with the flipping logic. And this is normal. It will probably go back and forth a couple of times now because, of course, Claude is also not perfect with coding, so it's going to make mistakes. But it will also, if you instruct it in a good way, be able to see those mistakes and fix those mistakes by itself. Backtest seems to be good now because it says, let me create a visualizations to better understand the strategy performance. Good. So it created two files here for me, which I'm going to show you in a moment. So one file called backtest analysis, which is this one, which looks very nice by the look of it. It turned our 10,000 US dollars into what is that? 700,000 US dollars. So that looks very promising. And it also showed me here how was the drawdown. So this is, of course, something very important. So at any given time, how much did this strategy lose? And we can see here, for example, that at one point within the first 100 trade, there was a drawdown of, let's say, probably 19 or 20%. Number of winning and losing trades, the return by period, and our cumulative P&L. So let's have a look here at the summary. Like we said, our initial capital, and these included already the trading commissions. This included already slippage also that we asked it to do. So turn this trading strategy with a simple flipping strategy, always in the market, change a long trade to a short trade on a short signal, and so on and so forth, would have generated in the past 2.7 years enormous profit. So 7,100% almost in profit. Basically turned 10,000 US dollars into 717 US dollars. Now, what is interesting, total number of trades, 722, equal long and short trades, obviously. Win rate, 51.66%. So it's just slightly over 50% over the coin flip, which is normal, by the way, especially for scalping strategies, also for longer term strategies. Normally, your win rate is always going to be somewhere around plus minus 50%. So we had 773 winning trade. We had 373 winning trade, 349 losing trade. The average win was $4,200. Average loss $2,500. Best trade 22%. Wow. Worst trade minus 6.5%. As we said, the maximum drawdown was around 19 to 20%. And here it confirms that it applied also the commission, and then it applied the slippage also. So let's see what Claude has to say about this performance. So backtest complete, it says the long and short signals are definitely worth trading. Exceptional performance. So as we said, we had a performance of plus 7,100% almost versus buy and hold. This is important. So a buy and hold strategy of Bitcoin would have returned 590%, which is impressive, of course, too, for 2.7 years. But our trading strategy outperforms this buy and hold strategy. And this is something that's important. If you choose to trade an asset, you want to make sure that your trading strategy is actually doing better than just simply buying the asset and then holding onto it. The trading economics, as you said, we have average win and loss. Of course, these always get higher when the capital gets higher. Very important, win to loss ratio of 1.7. This is important. This has to be well above 1, because it means basically that for every dollar we risk and lose, we earn $1.7 with this strategy, which is very, very good. So we applied the real cost, and it says it still achieved massive returns despite those costs. So that is a good strategy. Even with this simple layout of the strategy already seems like I'm onto something with. As a matter of fact, I am using this strategy currently, and I built a trading bot around this strategy, which eventually I want to also make available to our community. To my community. More on that in later videos. So if you are one day interested in trading this strategy in an automated way, make sure to follow me here, to leave me like, subscribe to the channel, and so on and so forth. And this concludes the first part of our how to use vibe coding, how to use AI and language models to not only backtest strategy. In the next parts, we then want to see how can we now take the strategy and how can we actually trade it? Because obviously, we cannot be in front of our screen 24/7. So we need some kind of trading bot that we can use to trade our strategy. And while there are, of course, ready-made solutions out there where you have to pay a monthly fee to do something like this, I want to show you a way how to create your own Bitcoin trading bot that you then can run on your own PC or server at home. I hope you enjoyed this video. If it's like this, then please leave me a like, also subscribe to my channel, and most important, leave a comment. Until we meet again, see you until next time.